Kia ora koutou, good evening everyone, and welcome to this Juncture Dialogue on geoeconomic fragmentation, its challenges and its opportunities. My name is Billy Lithberg and I'm Associate Director at Juncture Dialogues on Inclusive Capitalism. We're a co-sponsor of this event and conference, along with the Myers family and the Centre of Macroeconomic Analysis at ANU. At Juncture, we ask how capitalism can better serve people and planet. Tonight's dialogue sits squarely within that mission as we turn our attention to one of the defining shifts of this era: the increasing entanglement of global economics, geopolitics, technology, and corporate power. Across the world, the international economy is being reshaped by deep structural transformations. These include shifts in trade patterns, capital flows and technology, the rise of strategic blocs, and intensifying geopolitical tensions. As Stanford Law School professor Curtis Milhopt reminded us in a recent Juncture event, the age of geoeconomics demands that we rethink how corporations act and are governed, as businesses are increasingly drawn into the strategic work of states and exposed to political risks once considered far beyond the realm of commerce. In this context, questions of growth, cross-border spillovers, and financial stability take on a new urgency. The opportunities and risks of fragmentation are unevenly distributed, raising profound implications for how economies function and for whose benefit. These are the challenges before us this evening. We are delighted to be joined by two internationally recognised thinkers, Laura Alfaro and Andy Haldane, who bring deep expertise in global value chains, financial stability, and the political economy forces remaking today's global system. We are especially grateful to the Myers family for supporting their travel and attendance as Myers Fellows. Their insights will help us consider how governments, firms, institutions, and smaller economies like Aotearoa, New Zealand, can navigate a world of increasing uncertainty while still advancing prosperity, fairness, and resilience. Thank you again for joining us. It is now my pleasure to hand over to my esteemed colleague, Professor Prasanna, who will introduce our panelists and guide us through tonight's conversation.
Thank you, Billy. Ladies and gentlemen, I think we have an amazing panel tonight, and the accomplishments are so widespread that it would take me hours to go through. But very briefly, Laura Alfaro, she's currently the chief economist at the Inter-American Development Bank, on leave from Harvard Business School. What some of you may not know is that she was also Minister of National Planning and Economic Policy in Costa Rica, and of course is an expert in international economics, having published in many of the world's leading academic journals in the area. And she is, of course, a graduate of the University of Costa Rica, Universidad de Costa Rica, and did her PhD at UCLA. Andy Haldane is currently, I believe, Chancellor of the University of Sheffield, amongst many other distinguished achievements. He was formerly Chief Economist and a member of the Monetary Policy Committee at the Bank of England, and he's been elected a Fellow of the Royal Society, and in 2014 was actually listed by Times Magazine as one of the 100 most influential people in the world. So we have quite a interesting evening ahead of us, and please feel free to leap in with your questions, because this is a rare and very fortunate opportunity that we have two such distinguished speakers with us today. I think Laura is going to present a few slides and talk very briefly about some of the issues that she thinks are worth highlighting on this topic, and then Andy will also make a few remarks, and then we'll have a little bit of a sit down and a Q&A. Laura, the floor is yours.
Thank you very much for the invitation. This is also my first time in New Zealand. You have heard people that come here to visit, see your amazing nature, go visit where the Lord of the Rings was filmed, have your amazing food, so on and so forth. I'm just here to be able to go back and say, I came to the country that invented inflation targeting. And on that note, can be done. Small countries can float. Let me just, it did work, the joke, see? It did work. So I want to present the results from a paper that was written with my co-author, David Chor. This is an extension of a paper that we wrote in 2023 for Jackson Hole. At the time that we were writing this, my co-author is from Singapore. I'm from Costa Rica. We tend to joke that we were the small open economy representatives talking about the effects of tariffs. But my co-author being from Singapore, he's always very precise. And so he wanted to name the paper The Looming Great Reallocation. And I was like, no, let's get rid of the looming. Just great reallocation is nicer. And I think by now he sort of agrees with me that, yes, that has happened. It's the great reallocation. And so when he presented, he just said, yes, let's drop the looming. And so what we're going to do in this paper that was presented, and he presented at the IMF, Jackson Hole, Jacques Pollack conference, is we revisited some of the stylized facts from the first round of tariffs. As you know, this meant close to a 20 percentage points of additional US tariffs on China. These were kept by Biden. So again, the US firms have had already many years of these tariffs. So we're going to revisit and document some additional short-term and medium-term responses using more granular data. And then we're going to update the effects of the Liberation Day tariffs. We take this more as the outcome of this announcement. As you know, it's very hard to know what was the tariff. It was changed many times, a lot of exceptions, a lot of changes. And we're going to document preliminary responses. When we presented this paper, it was during the shutdown, so we couldn't get the last month of data. We're getting it as we speak, so we're going to present what we had back then. And so we're going to present a series of stylized facts. The first is that there's no deglobalization from the point of view of the US. There has been decoupling, but the US keeps trading with the rest of the world. In fact, this is a fact that Paul had mentioned already in one of his papers, but it has also been said by Richard Baldwin, Penny Goldberg. There is no deglobalization. I know that's a name that people like, but from the point of view of the US, it has trade, and it has actually traded more than before. What we do see is this diversification, but we're going to document that it's actually kind of limited. It is happening within the trade partners of the US. There is very little entry into this world, but there has been the reallocation. So the US peaked around 21% import market share from China, and by 2024, it was 13%. Countries that have gained, Vietnam, Taiwan, and Mexico. So a lot of evidence of nearshoring, but also that the US tends to have very stable regional trade partners. So if Asia loses, Asia wins. So in the 90s, Japan lost. Who won? China. And now China lost. Who won? Vietnam, Taiwan. So again, the US has these very stable regional patterns. We're going to also document that a lot of this change is happening through the intensive margin. Very few players are seeing new products, extensive margin. We also document the changes that we call on impact, the products that very quickly move. Those tend to be more labor intensive, versus the ones that took a little while, what we call wait and see mode. Companies were just paying attention, are these tariffs here to stay? Biden kept them, and so they started the reallocation. These are more the wait and see products that tend to be more related to contract intensity and stickiness. And we finish also with some Georgia projections to look at some of the evolution And then we look at the effects of the liberation tariffs. Again, this is preliminary. A lot of these effects are still unfolding. But we document that these round changes have been faster. And what I mentioned, this interesting stylized fact, when China joined the WTO, the US imported 9% from China of all imports, and the US now imports 9% from China. So there is a reversion in half the time of the import market share in this environment of growth. So let me go a little by little over these stylized facts. Let me just, all the people in this room are cited, and if not, send me an email and I put you in the list. So first fact, no deglobalization yet. The US, as you can see, has actually been importing more than in this previous era, close to 5.7% on average every year. This is in nominal terms, but in real terms as well, it has been growing. The growth from China is just 0.8%, so there's still positive growth, but as you can see, with a lot of changes, depending, this is the effect of the tariff. There was a little bit of front loading, but then it went down. During COVID, there was an increase in imports from China. There were a lot of products that you can only find in China, and then the recent changes. But as you can see, this growth rate more than compensates for the drop from China. And you can see it here that there are many countries that have seen substantial growth in imports to the US. India, Korea, Taiwan, Vietnam, Ireland, Mexico. So the US is not deglobalizing. The US is actually importing more than even 2013 to 2017. We do see some limited diversification, and here what we plot is, this is the distribution of imports from the US, the different countries, in 2017, that's the red line. The green line is 2024, and so you can see that there's a little bit of diversification. Mexico is now number one. In fact, depending on the year, Mexico was the main trade partner, but it became the main partner. It continues to be the case by 2025. This is July. You do see some little reshuffling here, but if you cut around 15, you see that the distribution is basically the same. So there has been some reshuffling in the top, but there is a point that the US keeps importing from the same countries because the number of industrial clusters, if you want, are limited. We joke that a newcomer was Netherlands. All of a sudden, Netherlands broke in the top 15 because it's one little company that produces one little thing that is needed to do one other little thing. And thus Netherlands just broke again. But again, you do see that there's very little change beyond when you go to the top 15. In the paper, we document that this is the case for products that have made the news that are important: auto parts, semiconductors, and electronics. There's a little bit of diversification in the top 5, top 10, but when you go to top 15, top 20, it's the same countries. Auto is one that the US is literally importing from the same countries. Very little diversification. Yeah, this is, I already said. This is an update of a figure that we had before. This shows this reallocation. The US, China has lost close to 13 percentage points in import market share from the US. So if Asia loses, Asia wins. So what are the countries? What we call high-income Asia: Taiwan, Korea; middle-income Asia, Thailand, India. And the other one that has gained a lot of market share is Mexico. And so, again, maintaining these regional stable patterns, but also nearshoring in the case of Mexico, and also a little bit Canada. Canada tends to fluctuate a little bit more because a lot of those imports are oil, and so it would depend on that, on the price of oil. Again, we do also trivia in the paper. what are the products that are gaining, and people always like this part of the trivia. So a lot of laptops and mobile phones are leaving China. Those are a lot of things that are going to Vietnam. Electronics, first it was very labor intensive products, but then it has moved a little bit into, if you want lower cost electronics. Mexico has gained a lot of products: electronics, furnishing, auto parts, vehicles, and semiconductors. I was also shocked. I didn't know Mexico has so many semiconductors, but semiconductors is also getting nearshored to Mexico. And Taiwan has gained a lot, and this is also related to semiconductors. There is this view that a lot of this is AI and is related to AI, but I think people forget, if now in the US they're like doing plants and energy centers and so on and so forth. These are things that were planned not yesterday. This is a process that has been ongoing in the US. It just so happens that now is materializing. But this is a process that has been happening for a while, and you do see some of these changes in the trade data. In the paper, you also do a decomposition into changes that are at the extensive margin, adding new products versus intensive margin. I'm not going to bother you in New Zealand in a beautiful afternoon with the formula. Just take my word that this is the extensive margin, this is the intensive margin. I think there's so much that you can take in the afternoon. I already did an inflation targeting joke. So let me skip the formula, and let me just show you some results. For the most part, in the first round of tariffs, it was a lot of intensive margin. So China lost 95% of the changes were in the intensive margin, and the countries gaining a lot was also in the intensive margin. So you already had something there. Let's do a little bit more, except for Vietnam. So products, Mexico in the first round, and India saw new products. But for the most part, everyone else is just at the intensive margin. If we go to the 21-24, it's even more at the extensive margin, again, except for two countries, Vietnam and India. Then we go and look into the timing. This is a little bit of a busy graph. These are the changes in the first round of tariffs to 17-20 against the change 21-24. And we divide into products that we call on impact. What were the products that very quickly changed? So these are the products that China lost market share very quickly in the first round and very few later. And so you see a lot of 85s, 84s, that is a lot of electronics, and you see a lot of textiles. So those were the products that very quickly reacted. Then in this quadrant, you have the products that we call wait and see. Let me see if these tariffs are here to stay. So these are things that didn't change a lot in the first part of the Trump tariffs, but reacted very quickly later. And what do we see here? You see also a lot of electronics, more complex products, and these are the products that we call persistent. You did see changes quickly, but you continue to see these products moving. We do this analysis a little bit more systematic, and we use proxies of labor intensity, capital intensity, measures of upstreamness, which is a measure that Paul and David constructed. A product is very upstream, it's very far from the consumer. Think chemicals, oil. A product is very downstream if it's very close to the consumer. Think textiles, toys. And we use measures of upstreamness, relationship stickiness, contract intensity, skill, and capital intensity. So what are the products that very quickly change? Very skill-intensive products. So if you use a lot of labor, those are the products that left China first. China developed. What is development? Development is paying your people higher wages. So already a lot of those products were leaving China. They were moving to Vietnam. So there's a little bit of noise in tariffs, so they just move faster. And those are the things that move very quickly. What started to move a little bit later, we start to see things that are contract intensive and relationship specific. The ones that require a little bit more time and thinking, no, these tariffs are here to stay. Let me start finding people who can do this. And also skill intensity. We look at the effect of the liberation tariffs. And what is interesting is that everything moved. Like labor intensity, capital intensity, skill intensity. So it just felt that for all this time, firms got used to there are tariffs. And there's a lot of discussion about uncertainty, but the uncertainty when Trump arrived was an uncertainty of what will be the number. But it was not uncertainty that there will be tariffs. So he arrived and firms just like, okay, we have all these plans to move, and they just enacted. So it just feels that they just went through the sunk costs. Okay, this is here to stay, let me move. And you do see that absolutely everything moved. And in fact, we document that this time around, the changes were faster. Then we look at local projections. We look at different variables where we see the changes in import market shares. So we look at the change in import share from the US. We use an indicator of extensive margin, intensive margin, and duty inclusive unit values. So the price of the product, but after paying the duty. And we relate this against the tariff, and we use different fixed effects. So this is the cumulative response at different horizons to the China tariff shock. And we in this analysis, we do yearly analysis. We look at every year. So this is the response of China's imports. So you can see that this is when the tariffs were put, and you see very quick changes in import market share. As I said, in the case of China, some happened in the extensive margin, but most of the change was in the intensive margin. The scales are different. And we do find that a lot of the effect was passed to the consumer. So we find close to the estimates that Steve finds, close to 0.7 pass-through. And again, Steve has documented that there are many other papers that have documented that a lot of these tariffs were passed to the US consumers. In the paper, we look at different products. So Vietnam, again, you do see the changes, but it's not mostly on the extensive margin. You don't see a lot of action in terms of the intensive margin. And interestingly also, it's not so clear in terms of prices. In Mexico, you do see a lot in the intensive margin, and the increases in the market share. Also, it's hard to see some of the price effects. And in Taiwan, you do see a lot of intensive margin. And here you do see a lot of the increasing prices, so the effect of semiconductors. And so in the paper, we go over different changes for different countries. So then we look at the effect of the liberation tariffs. And again, just take this as tariffs have come, because the number, again, as we know, has changed and continues to change. And there has been a lot of uncertainty. What is the number? Who pays it? When? How? But you do see that the effect this time just accelerated. You do see a big impact in China, big impact in Mexico, Taiwan, Vietnam. So this time around, in 7 months, very quick change relative to the changes that we had seen in the past. And as I said, one thing that is striking is that in 2001, the US imported 9 from China. It peaked around 21, 22% to 17. And in half the time, we came back to 9%. And as you know, the world didn't end. It didn't end. One of the reasons why the world didn't end is because all of this change happened against US importing more. So this was a change in market share, because not that we just didn't import from them, is that we just reallocated and are importing from everyone else, and a lot. And so you do see this, the dramatic increase, and again, this big drop in half the time that it took to get there. And we look at some of the effects, and again, in this time, we do it by months. The previous were years, now we do it months, and you do see that this reallocation this time around is happening very fast. The loss even more from China, extensive margin, a little bit intensive, and so far we were not able to find price effects. Again, this data was July. The months that are the Christmas imports are the months August, September, and so we may see it there, but we just didn't find significant effects in terms of prices. Again, this does suggest that despite the uncertainty, firms just had the plans ready. And so when he came, they just reallocated. And so to conclude, again, there has been a surprising resilience of US imports. This has been through reallocation, diversification within the same industrial clusters, a huge growth in US imports, again, associated to many things. And now we start seeing also products that are contract and relationship specific. That does mean that this round is creating changes that are going to be a little bit more long lasting, not only because of the expectation that these tariffs are here to stay, but also because firms are starting to move things that take a while to move. And so it's likely also to be a little bit more sticky. The other is that there was a hope that this reallocation would open opportunities to many new countries. But again, it seems to be happening within the countries that had already the capability to do this, in part also because the changes have been happening very fast. Can the global trade go bounce back? Well, again, this has been happening in the background of a lot of trade. We do conjecture that these changes, and I think this has been a theme in the conference, many have repeated that, these tariffs are here to stay. Like protectionism in the US is here to stay. David, Maggie, and I have a paper where we try to convince people that trade is good, giving them facts, a little bit along the lines of the immigration paper, and we just couldn't. We told them, trade lowers prices, tariffs increase prices, trade has created all these jobs, because the US unemployment is very low. And no matter what we told them about trade, they were always against trade. And so there was a moment like, why are you against trade? We're telling you good things about trade. And we realized that in the US now there is this idea of trade, national security, China, loss of jobs, that is very hard to disassociate. And that is there, and that is what is creating a lot of this backlash. Again, I don't think the president created it. I think it just is there, to the point that also Biden kept it, and a lot of these changes are here to stay. So it does mean that for us, small open economies that have benefited from the multilateral world, there's something that we need to think how we're going to deal. It is possible that these changes are a way for the US to push bilateral, because let's face it, the multilateral was a little bit stuck, and that maybe after this happens, we can go back to multilateral. But it's clear that there is a change in the system. The US, in my view, was the anchor of this globalization era. And so the views that the US has in terms of globalization are likely to shape the next era. And with that, let me finish.
Thank you, Laura. That was brilliant. Andy, would you like to opine for a few minutes?
Yeah, happy to. Evening, everyone. Lovely to see you all. I've been in your beautiful country for 40 hours now, and I'm loving it. So thank you for welcoming me. I've got no slides. My only prop is this thing, which I brought up. Sustained me through the hour. Laura's done such a fantastic job of setting out where we are. Let me make a couple of points that really riff off what she just said. I mean, the key point, which is super clear, is how little has happened, right? How robust global trade has been, despite all that's been thrown at it over the last several years of this century. And why is that? How could that be? And some of it, as Laura said, is down to this cat's cradle of global trade was so interwoven. Those global value chains built up over many decades, so lengthy and so dense and thick, that you simply cannot unravel all of the knitting overnight. Indeed, if you need to reconfigure, and there's been some reconfiguration, that can happen. And actually what's true of global trade could be said of flows of other things across borders. So this is global trade, hardest hit probably so far. Look at global trade in services. that is still at its high watermark. Look at flows of people across border. That too is at its global high watermark. Look at flows of money across borders. That is at its global high watermark. Look at flows of information across borders. That is plainly at its global high watermark ever in human history. So we have now got the most coupled globe we've ever seen across almost every dimension. Despite all the talk of the end of globalisation, the death knell has not sounded for it so far, and thank heavens for that. So how come? How do we end up at this point? So let me do a little bit of history and then a little bit of crystal ball gazing about what globalization 2.0 might need to look like to avoid any great reallocation, to avoid any decoupling from here. Because the story of the 20th century is actually a remarkable story of the deepening and broadening of globalization along all the dimensions that I've just mentioned. Plainly true of goods and services, whose share relative to global GDP trebled in the immediate afterward, in the second half of the 20th century. What's true of goods and services was true to an even greater extent of cross-border flows of monies. They rose in the second half of the 20th century by a factor close to 5 rather than 3. If you turned from goods and services and monies to people, cross-border flows of people, that increased by a factor of 10 in the second half of the 20th century. And on the final dimension, the one that's often missed, but actually foundational to all I've said, which is flows of information, that simply went through the roof. What was atomized pockets of information in the middle of the 20th century had become a genuinely global information commons by its end. And that's among the reasons why businesses these days can have complete line of sight on their global supply chain and to reconfigure it as at pace, as has happened a bit, if circumstances do change. And overwhelmingly, those things I've mentioned, that halcyon period, that golden era for globalization, has been an unalloyed good for growth, living standards across pretty much every country on the planet. Something we should not lose sight of. But if that is the case, how is it then that as we turn from the 20th into the 21st century, we've started to doubt ourselves? That we started to question whether trade is indeed the good thing that Laura mentioned that it was. Whether flows of people are indeed always and everywhere a good thing. The same is true of monies. The same might even be true of flows of information. What did we, as the economics profession, get a bit wrong? Well, the aggregate picture we, I think, got right. If you do those things, if you go through that halcyon period, that golden era, that will deliver large and sustained significant improvements in the aggregate economic fortunes of every country taking part. And it did. But there's a but. There's always a but. What did we miss as a profession? Why was our lens too narrow that's caused others to question whether this was the right path to follow? Well, the big thing we missed is the distributional consequences of all of the above. And also the social side effects that flow from those cross-border flows of goods and services and people and money. We now know that great widening and deepening and lengthening of global supply chains didn't advantage everyone. There were some losers, some very significant losers that came at a very significant social cost. Losses felt in jobs, in livelihoods, in decimated communities, particularly among some of the older industries in Western economies, the scars of which were deep and are still being felt and show up in an aversion to trade in some quarters of both the economy and indeed the body politic. And what's true of trade and jobs is true of cross-border flows of people as well. An emerging aversion in some places to immigration. Fearfulness that might tear apart some of the social fabrics in some of our communities. These are legitimate concerns at the distributional and social level. And if we are to build a globalization that is resilient, continues to be resilient to all the forces that Laura set out, that will require an augmentation. If we are not to get globalization minus, we will need to construct a globalization plus to try and curb and offset some of those distributional and social consequences of that rising tide of cross-border flows of goods, services, monies, people, and information. And maybe just to tee up the conversation in the room, what might be contained in the plus? What needs doing a bit or perhaps even a lot differently to safeguard globalization for the next half century, to build on its successes while shaving away some of those social costs? Well, one thing, and perhaps the most important of all, is the people bit. It's people that bore the consequences of these seismic shifts. We to make it easier and less costly for them to transition. If their jobs disappear, if their industry disappears, if their community disappears from beneath their feet. And that will require making an even bigger, an even lengthier effort to reskill and retrain people if they find themselves on the wrong side industrially or in technology terms. I would say we need nothing less than a root and branch rethinking and reformulation of the educational journey from cradle to grave. If we are to avoid the clutches of the machine and AI, and if we are to avoid trade, whether it's in monies or goods and services, not to have the hollowing out effect we saw it having in the latter part of the previous century and the first quarter of this one. Now, I haven't mentioned politics so far, but I'm going to, because it's clear that alongside this questioning of the economic orthodoxy, which has been legitimate, by the way, there is being a fraying and fragility in our political systems as well that have added to these concerns about a great unraveling. The 20th century was actually a spectacular success story for the body politic. We began that century with only a tiny slither of countries internationally being representative democracies, and ended that century with the majority of countries on the planet being democracies. We established freedom not just of movement of people and goods and services and money and information, but freedom of voice and freedom of vote for very many more billions of people. Another huge success story. With that mass flourishing of our geoeconomy, we saw a mass flourishing of our geopolitics. That's the good news. The bad news is that over the course of this century, we've seen a fraying of that as well as populist forces have gathered strength and continue to gather strength on every continent across the world. If we are to fix that partnership, that combination of geoeconomics and geopolitics, of course, we need to change our flavour of globalisation and fix the geoeconomics. But in parallel, and as importantly, we need to refix and reformulate the geopolitical element of this as well. Right now, especially among young people, there's a disenchantment with democracy. A majority of young people are no longer in favour of democracy. We are losing the argument about freedom of vote and freedom of voice. And as that will require on the economic side a different flavour of globalisation, on the political side, this will require a different flavour of democracy. One that gives people more of a sense of agency, voice, and vote. One that is people-centric in how it makes democratic decisions. So alongside the economics of this, which I'm sure we'll discuss in the room, the geopolitics and the domestic politics remains just as important if we are to safeguard for the next century, for our children and grandchildren, all the benefits we have had over the course of the past 75 or so. Let me stop there.
Thank you. Let me give you some time to reflect on what has been already a very rich conversation, and prep your questions, which I'm sure will come thick and fast in a few minutes. But while you're gathering your thoughts, let me kick off with a couple of questions and exploit my prerogative as the panel chair. Laura, you ended with a reminder that this episode of globalization has kind of relied on the US anchor. And I guess in the previous era of globalization that Andy refers to, we had a British anchor that was perhaps underpinning some of this stuff. What now? What rules of the game? What shape should multilateral organizations, of which you are now part, what do they look like? A journey without maps now, I mean, is what we seem to be going through. And I think that may be part of the concern around this topic. It may not be that globalization has deglobalized, but it's a journey without maps.
So do you know the song Living on a Prayer?
Oh, yes.
Sing it, Laura. Sing it for us.
I actually know that song by heart. And the reason I mentioned that song is if you know the lyrics, and that's an 80s song, and yes, for all you people, young people, it was a better decade. Despite the fact that we had the default, inflation, so on and so forth. Yes, musically, culturally. But that song is, the reason why I mentioned that song is because it is, these patterns of inequality, they're not new. That song is about the loss of jobs in mid-US. That's an 80s song. And he's talking about that they have no jobs and the dogs and the union is on strike and so on. So these patterns are not new. I think there is trying to blame the loss of globalization on inequality, but that has been there for a while. There is something that happened more recently that clicked. It is true that the loss of jobs in certain places, what there, and income inequality. I am more of the view that is this, there was a view that there was the loss of a legitimacy or fairness that came from having to interact against another sovereign. In most of the models that we have, that we think about welfare, we're thinking of either atomistic players, or if they're not atomistic, it is sort of private sector. In the background, there can be some government, but it was still playing against private. I think it became different when we were playing against a big sovereign. and that sovereign was using all the powers of the sovereign to push some firms. I think that is what delegitimized some of the things that we're seeing and created that trigger on top of the social inequality, loss of jobs, and so on and so forth. And that is probably what needs to be fixed to be able to regain this multilateral system. Some idea that the process and the outcomes are fair, and I don't know if that can be done given the current situation. But in that sense, a lot of the things that are being done do feel legitimate. There was a view that it was unfair, they were using a lot of power of the state, they were perhaps taking some copyrights, trademarks, so on and so forth. I think that's, in my view, that's what triggered it. And perhaps this change can create some form of going back. That's because I'm from Costa Rica and we always tend to be optimists. And so I do think there might be a way to come back. But I agree, it's complicated because of the current realities. And I won't say much more because I do represent a multilateral, so let me end there.
Andy, I think your question, Prasanna, if I said correctly, is one about leadership. Where's it to come from? Is it the IFIs, which Laura's now part of? Is it our global political leaders? Well, I think it's both of the above, but not just them. So the story Laura told, and the reason for that cat's cradle, that wasn't driven by governments or IFIs. That was driven by businesses. They're what made that happen. They glued the world together in their business decisions. And I think there absolutely is a role, a leadership role, a greater leadership role to be played by business in making the case for the benefits of this thing. Often businesses duck for cover when it comes to these knotty issues around the economy and social policy. But actually, I think that if ever that's to change, now will be as good a time as any, given how foundational all of this is to their business models, as well as the welfare of lots of citizens. I do think the IFIs have often been a little bit leaden-footed and overly defensive about the status quo on the globalisation front. They were late in talking about some of the distributional social effects we've been talking about a bit this evening. And that has contributed, I think, to a questioning of the role, less true of your organisation, especially since you arrived, Laura. But that has been true of some of the others. So I'm not suggesting a Bretton Woods 2 moment, but if ever there were a time to think about whether the institutional machinery that maintains our global trading economy and global financial system now will be as good a time as any, better to adapt than to be scrapped. And the stakes, I think, are that high just at the moment.
Thank you. So back to the cat's cradle then. I mean, you know full well from your own time at the Bank of England that these cat's cradles, these complex networks are fragile and can be rather fragile. So is it just that while we've had an autobahn, a globalization autobahn that has enabled us to go from A to B, we're just not very adept at dealing with accidents? Are we just repeating the same mistake again?
Yeah, so some of the work, when Prasanna and I used to work together a long time ago now, when we both had a bit less grey hair than we do now. And this is around the time of the global financial crisis. And the big learning for me from that crisis was this robust yet fragile property of tightly coupled webs. That in response to small and medium-sized shocks, those coupled networks served as a shock absorber. That's why we had the IMF, head of the global financial crisis, suggesting, and not just them, the global financial system had never been more robust. But a shock absorber in the face of small and medium-sized shocks in a tightly coupled web becomes a shock transmitter when the shock is of a sufficient size. And what is true of global finance, what was true of global finance, is also true of global trade. If the hammer blow was big enough, could we see that complete unraveling of the knitting of global trade, as we did for global finance 18 years? That must be a possibility. I wouldn't want to rule it out. We shouldn't take too much comfort from the robustness that Laura illustrated if on a sustained basis, trade were to take a hammer blow. And that, for me, underscores the importance of us making the case as stridently as possible for the benefits having got here in the first place. And indeed, where we can, build in diversification buffers, whether you are companies or governments, to do that. And I think that would be the clarion call for me to avoid the sort of collapse that we saw 18 years ago in finance. Because it would be a true tragedy, a second tragedy, if global trade were to go the same way.
Let me add on that note that this that we document has been on the background of a very robust and solid financial system. So in fact, I have a paper with Camelia Mignou and folks from the IMF that have shown that banks have helped firms reallocate. And that also explains why this has happened.
That's a good point.
It could be luck, it could be good policy making, but that has been the reality. The banks have been solid, balance sheets have been clean. And as you know, and I'm from Latin America, so we also know that the crises that are like devastating are the financial crisis. And so far because of COVID, for many reasons, firms also had good balance sheets, households also managed to improve. The risk now is actually governments that have increased a lot of debt, and in particular countries, rich countries, and that I actually find that to be one of the biggest risks, the increasing debt, because it's also in this background of need of a lot of social protection, and there's very little flexibility to do a lot of change. And so, for example, your country, they just increase even more.
I know. No, I mean, the point you make, there's a really important one, Laura, actually, because in terms of what are the potential fractures and fault lines globally, public debt is plainly one. And that's been borne out of the fact, as you say, that this century's been remarkable in the number of once in a generation, once in a century, global shocks that have hit it. So global financial crisis, its European aftershock, the euro area crisis, then Brexit, local difficulty with the global consequences, COVID, cost of living shock, geopolitical crises that we're now living through. I mean, amazing to have had, and terrible to have had end-to-end that sequence of nasties. And in response to which, governments probably rightly rode to the rescue and extended the safety net. Perhaps too far. But the consequence now is global levels of public debt that have left fiscal space pretty much exhausted. If another biggie were to come along, and please God it doesn't.
Except that it will.
I know, but don't spoil it. Who knows from what? I mean, it could come from public debt. Then. That would be a moment, I think, of real challenge, and that does call, I think, for thinking imaginatively about how we share the burden of that, both between the public and private sector, and on a cross-border basis, which is a conversation we've scarcely started having in most countries, I think, around the world. So I think your point is entirely fair.
One final question before we slowly shift to the audience. The decline of the expert in all of this. I mean, we've had, the sequence of shocks that have been hitting the economy, the world economy. And if you think of the 1990s, the early 2000s as a sort of high water mark of the expert, independent central banks, great trust in governments and individuals and the technocrats. yet now perhaps much less so, and particularly in countries like the UK and the United States. Those sorts of institutional settings are are being challenged, if we can put it politely. What are the role of the expert? Because in a way, this comes back to the leadership point. If the experts, the economists, aren't listened to, because we were too narrow in our prescriptions about globalisation, is there much hope?
Well, that's optimistic note to well, I don't know what Laura thinks. I mean, so a couple of points on that, and this is not unique or even distinctive to economics. The distinguishing feature of the global financial crisis was how many professions got it spectacularly wrong. Really a failure of imagination as much as anything else, and that was partly our profession and partly others as well, including bankers and regulators and rating agencies and governments. 2 points on that. One, experts, so-called experts, need to wear their expertise pretty lightly, indeed with a healthy dose of humility, and crucially, to fess up when they get it wrong. I spent, 3.5 decades in public policy, and the problem is not getting it wrong, because everyone gets it wrong now and again. The real problem, the real mistake, is not admitting to the mistake. That's something that the general public rightly has no patience for. Zero tolerance. And by the way, the general public can sniff bullshit at 50 paces, right? So they know what's going on. And they're rightly intolerant of that. So experts, institutions need to become much better at fessing up when they cock up, which will happen. People are understanding of that. Everyone mucks up at work. But when they muck up at work, they admit to it. If you don't, then trust and understanding is lost. So being humility and admitting your mistakes, which of course is the first step towards learning from those mistakes, is really important. Only the point I'd make, and my one big learning, by the way, from the latter 15 years at the Bank of England, was the importance of the wisdom of crowds. Just someone's a non-expert on the economy doesn't mean they don't understand things about the economy, right? So when I spoke about a different flavor of democracy, mine would be one in which we involve people, ordinary citizens, in the democratic process and in understanding the economy to a much greater degree than in the past. We have a degree of wisdom, one would hope, but not a monopoly of wisdom. And if we'd used that citizen metric, I think we would have avoided some of the worst mistakes we have made over recent years. For example, the inflation problems we've had in many countries around the world over the last couple of years, that was there. If you spoke to businesses, they could tell you it was in their supply chain really early on. But instead we relied on our models were defective, we got it wrong, and a hammer blow was dealt in that case to the credibility of central banks. So how we as experts operate, how we as politicians operate, bringing in the wider public, using deliberative democratic techniques to add to our stories, to deepen our stories, to give them something that will resonate with the public. That, for me, is the key next step for experts.
Laura, what do you think, especially given Latin American experience?
I actually want to have like a more positive note. In Latin America was the region where central bankers increased the interest rates first to fight inflation. And this was the outcome of, for many years, trying to improve institutions, frameworks, and also independent central banks. I'm actually of the view that some was mistake, but I do think there was some view of some people that had the wrong view that inflation was actually good. In Latin America, we have learned that inflation is a tax that is paid by the poor people, that is very regressive. And so when these first signs, and you are correct, there were signs, if you talk to businesses, they will tell you, as soon as those signs came, in Latin America, they increased the interest rates because they didn't want the poor to pay. I do think there was this view of there's inflation, unemployment trade-off, and someone was playing with that, and then they realized, nope, there was no trade-off. And I actually think it was more playing politics by people that should have been doing their job as economists that allow some of that. I'm not saying all of them. Some was just human mistake, but some was that they were not doing their economist job. Sometimes I think that we as economists, we should try to be less activist and just be economists.
Sound advice. We've had loads of questions coming thick and fast, so let's get stuck in. So our first questions go to Laura. Has the reallocation of trade been accompanied by a reallocation of capital as captured by capital flows and foreign direct investment?
So in the first paper with David, we made a comment, which I forgot to mention, that there has been reallocation of imports. Some of the main U.S. import partners have increased their imports from China, so there is these indirect effects that Baldwin has documented. But in some of these countries, there has also been increase of FDI, in many from China. And again, Vietnam is an example, although Vietnam always has had it. But what we do look is at capital flows and FDI. What is interesting is that the countries that are getting the trade are the ones that are getting the FDI. And so that at least is the case in Latin America. So Mexico is getting the FDI. Depending on the products, it can be in biomedical devices is Costa Rica, is Dominican Republic, and these are the countries that sell to the US. Perhaps the one that is interesting, at least in Latin America, is Brazil, that does get a lot of FDI, and it does sell to the US, but it's not a main trade partner. So we do see some of reallocation of FDI that way. The same thing to some of the countries in Asia. The other one that was not mentioned is remittances. There was a fear that there would be a drop in remittances. At least in the first semester, there was actually an increase in remittances. And many people were taking this to be front-loading. And now the new data is coming out. Remittances continue to be very high, which, again, is still puzzling, and we need a little bit more data. It seems to be that since the US is growing that much, then remittances continue to grow, which is another, if you want, form of another part of the current account, and for many countries it's another important flow. But so far the data seems to be also very robust, and you mentioned this. It's robust on capital, is robust on trade.
A second one for you. Alongside the reallocation of US imports away from China, has there been an increase in onshoring?
So also in the paper with David for the Jackson Hole, we did an analysis of employment. We focus on the four main sectors: auto parts, semiconductors, and electronics. In some of those sectors, there's seemed to have been an improvement, but it seemed to be unrelated to the tariffs. So auto and auto parts, there was a huge increase after the global financial crisis, and there was a trend. Auto parts in particular was hit with COVID. So it didn't seem like tariffs were doing a lot there. The one sector that seemed to be improving and continues to be improving is semiconductors. When we wrote the paper for Jackson Hole, we were like, this is tariffs, because it sort of matched the time. Exposed, we're like, no, that was AI. As I said, this is a process that is been going on in the US for a while, and I think now we're like seeing it, but I think firms were but semiconductors is the one that you do see some onshoring in terms of employment. A lot of the announcements of new factories are happening as we speak, and so that we need to wait for it to materialize.
Good, thank you. Andy, a question for you. Will these changes in geopolitics and unsustainable US debt lead to a decline of the dollar and scope for an international financial crisis?
Yep. They're a great set of questions, by the way, and lots of them.
And was that a yes/no answer? Or they want the number and the date?
The central bankers never give yes/no answers. Unless it's yes and no.
You're no longer a central banker.
And no longer a central banker. So Laura and I were having a violent disagreement during the interval about whether the voice of blue collar America was better captured by John Bon Jovi, Living on a Prayer, or by Bruce Springsteen. I mean, I'm tempted to have a vote, having made the case for deliberative democracy.
No, but it has to be against the song. So give me a Bruce Springsteen song that beats Living on a Prayer.
Well, I'm sport for choice, to be honest. I'm sport for choice. We shouldn't make...
Just say one song.
Although it's tempting. Maybe at the end, Prasanna, we can bring that in.
Born in the U.S. is about the Vietnam War. It's not about...
What's the
Think
question?
gonna beat me an 80s songs. Not
The US dollar and yes, that's right.
Meanwhile, back at the conference. Listen, I don't think, I mentioned, I think that there's a genuine question about the sustainability of the public debt load globally. There really is a question about that. And whether we're reaching or approaching the point where we are getting crowding out, genuine crowding out of private borrowing investment by public borrowing investment. And the further global yields escalate, the greater the chances of some of that crowding out. So we're closer to that point than certainly any time in my working lifetime. Just foresee that playing out as a global international monetary crisis emanating in US government bonds. I don't particularly. We see examples of particular sovereigns, particular countries, find themselves needing to go into reverse? I think we absolutely could. I think the heartening thing on that, and just take a bit of a European perspective for a second, is to look at the remarkable turnaround in the public debt performance of some of the southern European countries over the last 10 years. If we'd sat here 10 years ago and someone had said to you that Greece could borrow on finer terms in public debt markets than France, I'd have not be taking that. Right. That seemed like a long shot. And here we are.
Yeah.
And here we are. So when you put your mind to it, maybe it takes a crisis sometimes to get your public debt in order. We shouldn't wish a crisis, but I think there's a chance that we could see some countries needing of necessity to put the house in order. That needs not to be the still fulcrum of the global financial question that is the dollar and that is government securities, US securities. I don't think it will be. So I think that's no.
Ever the optimist.
Well, qualified optimism, nothing against that, right? Need a bit of that at the moment. And there actually is plenty of things to be optimistic about. There is not a problem, although there are many and various, and we are facing this era of polycrises, or whatever's going on. But of course, the Mandarin for crisis breaks down as challenge and opportunity. And there's opportunity in all of the challenges that we face, whether it's inequality, the climate and nature crisis, the demographic crisis, and the march of technology. They all contain very material upside as well as downside. And I think if there is some upside to the ever heavier public debt load, is that it may be a chance to rethink about the structure and size of the state, which I think is long overdue.
Okay, thank you. Question for both of you here. How do we avoid the same distributional effects we saw from goods trade in the sharing and trade of information? Laura.
So that question has a country bias because it depends where you're from. I come from a country where trade was beneficial. Like we wouldn't exist without trade. So I just want to say that has a country bias. Again, China let's face it, it was the greatest reduction of poverty that we have seen. It did create some income inequality later, but that was so that has like a part of the world bias. I'm going to steal your line on education. I am shocked how in the US, in Latin America, maybe Europe didn't go through this, but in COVID, we not only didn't teach kids forgot things. That's what happened. Like in terms of math, science, it was a great destruction of knowledge. We haven't done enough to solve it, and that is my biggest fear, that we're creating this tool, but we haven't put effort to teach kids basic math and basic science, how to read and write. I actually don't need a change in the education. I just want to improve the education that we should have had. And it is probably that this is more talking about even Latin America. I think if we would put more effort to teach kids the basics, not just to put them through school 15 years and they learn with a title, no, that they actually learn something. I think that is the way that we can avoid another distribution crisis from services.
Okay. Another one for you, Laura, which I think fits with your current hat. How can the global South pivot to be relevant in what is unfolding?
Oh, God. You don't understand. I don't like the term global South because I'm from Costa Rica and we're in the Northern Hemisphere. And sometimes I fear in the US they don't teach a lot of geography. And when people use the global South, they forget that Mexico is also Northern Hemisphere. And I know it's being used as a way not to say that we're not rich countries, that we're middle income or poor countries, but that's a reality. We're middle income countries and poor countries distributed all over the world. Some in the South, some in the North. And what was the question?
How should they pivot to handle with or deal with what is unfolding at the moment?
So we're not the same. And again, I think everyone wants to put us in the same. So again, I am from Latin America and my husband is from Latin America. I'm from Costa Rica. He's from Brazil. We're very different. Size, language. We share many things. But I do think we need to be careful in these generalizations and be mindful that countries have differences. Having said that, for us, the ones that don't have power, because I always joke that for me to be represented, it has to be the G189, and that's not going to happen. I think us, the small ones, do need to fight for the multilateral system because we have no choice. We're just small, and in the world where the big ones fight, I've seen a lot of high school movies with the small ones need to bunch together.
Andy, this one's for you, and it relates to some of the things that Paul was saying earlier in the day. How should policymakers balance geosecurity needs with the risk of intensifying domestic inequality? Are the current tools capable of redistributing fairly?
So I think there is rightly and reasonably now an active debate about when we're crafting policies of all types, how we trade off the desire for a system, but it's trade or anything else, that's efficient, with one that is resilient, including to security concerns, national security concerns. And good that we do have that debate because it's a genuine debate, and the trade-off, as Paul said earlier on today, is one of the great unresolved public policy issues of the day. We need to be careful in tipping over. We underplayed security and resilience issues in the past. There'll be a natural inclination, temptation to overshoot in the other direction. And to justify everything, every piece of mercantilism as justified by national security or resilience concerns. I think there are definitely some things, activities or sectors, which you would always want to have some security of supply about. That would plainly include defense. would include energy, it would include food. That is not the same as saying it must all be grown at home. It does mean having a degree of redundancy in the system so that you have a home option as well as an overseas option if there's a possibility of the overseas option being turned off, as happened during COVID, and you're then overly reliant on a basically unreliable international supply chain.
No, the data shows that trade saved us.
During COVID?
Yes.
During COVID? Do you get enough PPE during COVID?
Eventually we did.
Eventually, yeah.
Costa Rica would have gotten 0 if it not were for trade.
Right. I mean, it can be, I'm not suggesting we detach from that, but giving yourself optionality about aspects of that. That's what I'm talking about. Option has value if there's some probability, however low, of the system shutting down.
The increasing shipping prices that a lot of people show was because everyone wanted a new sofa.
Really?
It was a lot of that. And it was all the COVID money, excess government.
Right. So the question is, do we need new ways of thinking, calibrating, and tools to strike this appropriate balance and not overshooting? My answer to that is absolutely a resounding yes. I mean, personally, for me, it's a very good thing that having gone out of fashion for several decades, we are now having, most countries are having, a discussion and debate about industrial policy. Under what circumstances does it make sense to back your winners, your superstar sectors that have a global competitive advantage, and in what circumstances it's sensible to pursue defensive industrial strategies? That is to say, have the optionality of producing things domestically, given the risk, which may well be very small, of global trade networks not working to your favor in extremis. That's a good debate for us to be having. We've probably seen as many examples of slightly misguided industrial policy so far rather than well-purposed industrial policy, but it's the right thing to do. It's the right means of hopefully seeking that better balance between efficiency and security considerations. Laura?
So I think we do have techniques to try to assess whether a project has a return, a cost benefit. A social project evaluation does consider externalities. We can debate whether we can price everything well or not, but there are techniques to do social evaluation, and that will tell you this is the return of the project and this is the project that should be done, and we can have a ranking. The risk is that is not how industrial policy is done. I've seen that it's not because they do, and it's not that they say, oh, the prices were not right and maybe we should. No, they just choose. And I'm from Latin America, and we have had many of those that didn't work. So my husband, for example, when we share stories of the 80s, I tell him that in Costa Rica, we had a great leader that realized we were not going to create computers, and that was not also the thing to do, to put tariffs to produce computers. It was better to give everyone the computer and make them figure out what to do with the computer. My husband, on the other hand, in the 80s in Brazil, they had the idea they should do the hardware. And so he tells me these stories of these brands of computers that I have never heard in my entire life. Have you ever heard of the Brazilian computer industry?
Rhetorical question, right?
Yes. And so they were stuck in the hardware when the world had moved to the software. And so one does need to be careful. At the end, these are done by decisions, and it's not always social planner that is maximizing welfare.
And ultimately those choices aren't technocratic choices. They're political choices. They're social choices. And I would set them in a social setting. It's one of the issues you might take to your deliberative democracy. So let's take another example from finance. So plainly, with hindsight, for the glorious benefit of 2020 hindsight, we got on the wrong side of the efficiency versus resilience line ahead of the global financial crisis. And no one was more vociferous than me at the time in saying we need to build massively greater buffers to guard against a next time. Fast forward 18 years. I am now arguing the opposite. Why? I think it was overshot in the other direction. I think the world is now riddled, including the financial part of it, with risk aversion. And that's among the reasons why growth has been so anemic. In the face of this uncertain world, everyone's hunkering down. We've got a modern incarnation of the paradox of thrift, and the consequence is too little risk-taking to grow our economies. In which situation, my arguments from 18 years ago flip over. The sign ought to change. So I'm now perversely, feels perverse to me, arguing for loosening the regulatory bounds on our financial system to encourage more creative destruction, more dynamism, and ultimately more growth. I mean, it's one of those inherent paradoxes, that paradox of thrift.
I'm going to give you an 80s song for that.
Huh? You can, as long as it's not Bon Jovi.
No. Money for nothing.
But, very good. Bit of Dire Straits. Any requests from the audience?
Right. Laura, you began by invoking New Zealand and its inflation target. And given that we seem to be thinking that on balance, globalization is good for the world, given that we certainly can't engage in industrial policy in a small little island economy, or much of it, what can we do to keep globalization alive, or help keep globalization alive?
So I do think we need to sustain our efforts at the WTO and so on and so forth. But you mentioned inflation targeting. I think a lot of resilience is built at home. And it's interesting that you're mentioning industrial policy. A lot of the policies that we now think are great, which one is industrial inflation targeting. In the case of Latin America, better financial system, was the outcome of the crisis that we had because of industrial policy. That is at least the story of Latin America and the debt crisis. And so I think remembering that there are the external things, but most countries actually do die for domestic things. And so to improve our infrastructure, our education, most countries still have a lot of internal barriers. There was a discussion of internal competition, how to make sure that there is competition. I think that gives us a lot of resilience, and maybe it's the time to do it. Europe is one that there's a lot of still internal restrictions. They're talking about how to really, really push for that single market. I look at you as Europe, but you left. But it's okay.
Not me.
But sometimes this adversity
I'm still there.
is what is needed. Is what's needed to push the internal reforms and all the things that we do know will reduce costs, improve welfare, improve efficiency, and also distribute income better.
Thank you.
Just, I am European, the ones that doubt everyone. There's something, we'd all agree that public information is a public good. And that public good is being degraded very materially at the moment, which is why we're having the wrong sort of debate about all manner of things, including prospectively around trade. And given that we're not going to be able, I don't think, to switch off the sources of public misinformation, which includes much of social media, by the way. I mentioned earlier on the wisdom of crowds, but we also know there is madness in crowds. And that madness appears to congregate around social media at the moment too much of the time. So funnily enough, there's a stronger case than ever previously for thinking afresh about the mechanisms by which we make available the public good that is public information. And there's a role for public broadcasting in that. There's a role for newspapers in all of that. There's a role for academics in all of that. There's a role for business in that. And there's a role for public servants in all of that, and the case has never been stronger for doing it. To your point earlier on, that should start in the earliest of years. The sooner people have an inquisitiveness about the world, the better. And that is plainly a question of schooling. I am of the view, let's face it, our educational model is pretty much unchanged from the latter half of the 19th century. Pretty much unchanged, essentially. It's still basically a chalk and talk model, where we try and pack as much academic stuff into young people's heads as possible in great chunks. And that is a mad way of educating anyone. We know it's mad because, let's say the UK, a third of all kids leave the UK education system loathing learning. That's the worst endowment an education system could possibly deliver. The one thing you've got to do is inculcate a love of learning, because if you love it, you'll keep on doing it on a lifelong basis. And to do that, we've got to rethink about not just what we teach. I think the disciplinary solos are fairly mad, but there you go. But also how we teach it. There's no reason now why we couldn't give everyone on the planet, every kid on the planet, their own personal tutor. Now, that would be a digital personal tutor rather than a human personal tutor. You'd love it. No, you really, honestly, you'd love it.
No, it didn't work. It was called Zoom. It was awful.
No, not Zoom. No, not Zoom. This would be,
It'll be a chatbot.
not a chatbot, a genuine, this is your personal tutor. It's there, answering, not just answering all your questions. They don't answer questions. They pose the right questions back to you. These things now exist at almost zero marginal cost. You give every child on the planet a personal tutor. Now, personal tutors increase academic performance on average by 2 standard deviations. Completely off the scale, because you're tailoring everyone's educational journey to their distinctive neurologies in a way no human tutor ever could. And you do that at close to zero marginal cost. That's within our compass now. That would generate that love of learning, not chalk and talk, but a Socratic dialogue on the every issue that's important of the day. If you asked about American independence, rather than have a child read a book on it or be lectured on it for an hour, they could engage in a dialogue with George Washington on the topic and bring the whole thing. This is all possible, and that's the way to generate the love of learning and that inquisitiveness that will mean we'll have the right conversation and dialogue around trade and finance and all the things bright and beautiful, rather than the wrong one, which we're often having right now.
I'm sure this is going to be in place at the University of Sheffield soon.
All you can go.
Laura.
All of them.
So now we diverted to things that I don't know. This is about education. But I have to say that once we had our child, my husband and I had this education. What type of education do you like? I don't know if you people, before we were like, shouldn't we have talked about this before we married? Like, what type of education do you like? Turns out we both were very old school. We're old school. Pencil. Yeah. Sit down, do your math, do your homework. There is a part of me that believes that for small kids, I don't know if they're older, but there's an age that interaction with the basics, the chalk, like the wood, like that is what's needed very early on. Later, I agree, it's a little bit more complicated, but very early on, bring me the good teacher. Bring me the human good teacher.
So, show of hands. John Bon Jovi. Who's the John Bon Jovi? Just you. Thank you. Springsteen?
No, he did it. Has to be a song.
Doesn't.
All right.
And the river is about that.
Yeah, every Springsteen song is about this.
The river for sure.
Yeah.
He doesn't even know them.
Okay, Thunder Rose. Thunder Rose, Bruce Springsteen.
All right. We could carry on for quite a while with it.
No, let me end with one.
Oh, okay. We're going to get a song.
No, We Are the World.
Very nice. On that very nice note, please join me in thanking Andy and
That was an extraordinary dialogue, very wide-ranging. First of all, I want to thank you, our participants, for being an extraordinary audience, clearly demonstrating a love for lifelong learning. and for sending through such wonderful questions. And Andy and Laura, you've left us with a great deal to think about. You've left us with earworms and a soundtrack for a dialogue, which is not something we've had before. And to thank you, I have an 80s mixtape for each of you. No, I don't, unfortunately. But what we will do is we will plant for each of you 5 native trees somewhere in the Auckland region. And that will be done for us by Trees That Count, which is an environmental charity helping to plant millions of trees around the country. So there'll be a lasting memory of your time with us.
And
this
they will
evening.
be named Bruce, Bon Jovi, Michael Jackson, Whitney Houston.
Yeah. So thank you once again.